Tom Lee just gave us a pretty big warning. Now, the issue here is a lot of people misunderstood what Tom Lee said. He explained to people recently in a video just this past week that the markets are going to run. Inflation's falling like a rock. The markets are going to run. Everything's going to have a bullish rally. But what they didn't really listen to is that there's going to be some uncertainty prior to that. The market doesn't like uncertainty. With the elections coming up, and of course the PMI data coming up in October, and the inflation data, as well as unemployment this month, there's been a lot of uncertainty in the market. But not only that, when interest rates get cut in a 25 or 50 basis point, there's usually volatility in the few days to few weeks following the rate cut. Specifically, the window is a couple of weeks. So when you put that together with the election, there's a lot of uncertainty. He specifically said that there's going to be this uncertainty in the market, and the rally will begin after the November election. November and December are historically great months. September and October, not so much. He did say that a pullback is actually good for the market as well, because when it pulls back, the dip, you can dollar cost average buy the dip, and it's like a springboard. The market pulls back, there's a lot of tension, a lot of compression, and poof, off we go. And that's exactly what's going to happen in November and December and going into January. Let's take a listen to what Tom Lee had to say.
Since the Fed did their jumbo cut, the market really hasn't done all that much except for one day last Thursday. Why?
The Fed unleashed us on an easing cycle, and that's going to be positive. We know it's actually historically positive 3 months, 6 months out. But what stocks do in the next month is a bit of a coin flip, and I think that's what we're seeing because there's some repositioning that took place. And also we're now thinking about the 40 days into the election. A lot don't want to commit capital until after Election Day, and I don't think it matters who wins. It's just they want to get that event behind them.
Oh, so you think we're going to have sort of a dash to the finish after Election Day is out of the way?
Yeah, and that's pretty typical. You know, in fact, in election years, the November, December rallies are pretty tremendous. And in fact, when markets are up more than 10% in the first half, you also get big rallies. I'd say one thing I've noticed is that the number of investors and professional money managers that think we're already in a recession is very high. And so I think the evidence just has to be better than expected. I think there is a lot of upside in the foreseeable future. Let's say 3-6 months out. But for someone to tactically say we need to pin a 6,000 target and then put money to work today, I think it's harder to make that case because valuations aren't on the cheaper end, and we've already had a fairly sizable move. So I'm not saying I'm like bearish right now, but to me, I'd have a lot more confidence saying 3-6 months out. I'm bullish into year end, but I'm a little less confident about how markets behave into Election Day. And not that I think we're going to have a huge drawdown. If we do have a big drawdown, you know, I'd be buying that dip. But I also don't think we can make new highs and then see the market blast off after election. Russell had a big week last week. It's some profit taking now, but I think that there's, you know, this is what bottoms look like. I don't think bottoms are straight up. I know in 2021, energy was bottoming, and it was also very choppy, but eventually made not only new highs, but then basically had a blistering gain in 2020, in the year following. So I think that's a multi-year start for the Russell. It feels choppy, but we're still near all-time highs, and there's a big fundamental case to own small cap.
So you guys have heard what Tom Lee had to say. There's going to be a pullback between now and the middle of November, probably the first week of November. So like the next 4 to 5 weeks at least, there's going to be some rough volatility in the markets. However, when the market pulls back, that's a buy the dip opportunity and a dollar cost average opportunity. You guys should be taking advantage of this, adding to your position. I explain this to my students all the time. This is something that I go over with them on a daily basis, waiting to buy the dip, dollar cost average, sit on your hands when the markets are too volatile and there's a lot of unexpected volatility and movement in the market. You have to understand what's actually going on in front of you in order to trade or to invest. And the more you understand this, the more successful you will be. I teach my students this, and they are learning at a rapid pace. I have students that have taken their $8,000 portfolio to 18,000 in 3 months. I have other students that have taken their 50,000 into 80,000 and other students that have taken 300,000 into 400,000 in as little as 3 months. And really, I teach a lot of psychology, sentiment in the market, direction, technicals, analytics of the market, history, understanding PMI data, inflation. If you guys would like to be a student of mine and learn how to gauge the market better and make better trades, I would love to help you guys out. But it is very serious mentorship. You guys have to be committed and show up ready to learn. And I'm committed. I show up and ready to teach you. You guys can sign up at any time. Investwithcorey.com right there on the screen. The link is in the information box below. I would love to help you guys achieve your financial freedom. But like I said, it's a very serious mentorship. And this is really what I've been teaching my students is understanding the psychology of the market, patience, fear, greed. But really, you have to understand that right now in a volatile time, if you make the right decisions, you can make a lot of money. Tom Lee was not wrong. He said that the market would rally by the end of the year. The S&P should reach 580 or 585. He said this in multiple videos back in June and July. And I believe we're on target for that. But the issue here is the unexpected. We don't know who's going to be in the White House in November. And this is what's taking precedence right now over the market and why it's so uncertain, not to mention the rate cuts. But as the month of October goes on and we get closer to elections, there's going to be a little bit more volatility. But once we get a resolve on the election and we know who's going to be in the White House, the markets are going to settle down. So let me show you these stocks that I highly recommend. They're a lot safer. You should be able to make some money selling covered calls because the market is not really bullish right now. It's volatile. So you want to sell covered calls around a 25 or a 30 delta. But not only that, it's far enough out of the money that if the stock runs, you make a good profit. And this way you're not kicking yourself in the butt for losing money. But you also want the juicy premium of the actual option itself. So if you guys are selling puts, I would sell puts at a 20 to 25 delta. And if you're selling covered calls, I would sell a 25 to 30 delta. This way you get more juicy premium, get some good exit on the calls, but the puts are going to be slightly lower on the premium, but giving you a better dollar cost average. I also want to point out that PMI manufacturing has stabilized. PMI services have expanded, which is good. GDP is up. Inflation is down, as well as unemployment stabilized. Inflation has dropped from 4% to 3.5 to 3.2 to 2.9, now to 2.5. Let's take a look at these stocks. Let me show you guys which ones I would get into, which ones are strong right now to make good money. So one of the strongest stocks, honestly, to look at right now is Walmart. Quite honestly, this is a stock that I believe is going to have a little bit of a pullback, possibly, maybe down to around the $78 or $77 mark between now and the election. Buy that dip because by the New Year's, my price target on Walmart is 85 to 90. So there is some really good upside to Walmart. You can see with all the pullbacks that happened since August and July, we can see that nothing's happened at Walmart except maybe a little dip right here. And it continued right on. Remember I told you guys, if you're getting out right here and you're getting in right here, everything in between is noise. Look at this, up, down, like big time, and then up and up we go. Doesn't matter. You got in, you got out. All of this, noise. It doesn't matter. I've explained this many times before. Walmart's a very good example. This is a very strong stock. Currently, right now, where the price is, I would sell 78 puts going 2 weeks out. And if you get in anywhere between 77 and 79, I would sell $81 covered calls going 1 or 2 weeks out. This is a very strong stock. It's in retail. And Walmart is going to do well, really, regardless of how the market reacts over the next couple of weeks. Going into elections relates to the next 4 to 5 weeks. And like Tom Lee said, the worst stocks to really put your money into right now, I don't know if I fully agree, but they are risky, is Nike, Rivian, AMD, Nvidia. These are stocks that I would kind of avoid. I do like Tesla. It's kind of more neutral, but I love Walmart. Lyft and Walmart will be good. So if we look at Walmart right now and you guys want to sell a cash secured put going out to next week, I would sell 77 or 78 puts. They're not that juicy, so we could wait for a little bit of a pullback Monday morning because PMI data is coming out next week. And I think Walmart will probably pull back to 79, maybe a little bit less. And you could get some really juicy premium. You could probably get about $40 for the 78 put, which is what I would sell. If Walmart does not pull back, I would sell the 79. We can sell maybe 4 or 5 of these bad boys and make ourselves a really nice, comfortable $200. And if Walmart starts to run a little bit, then we can just start selling puts at a higher delta. This delta is 33, which is totally fine because Walmart's a great stock and I want it. So Monday morning when the market's open, I am going to open a bunch of these contracts. Now, as far as covered calls on Walmart, If the stock doesn't pull back, I would sell covered calls around maybe 81. The premium on 82 is not good unless you go out 2 weeks, and then it's decent. But I would probably look at holding the stock without selling a covered call if you really want to capitalize on the move. I don't think these stocks are going to move a whole lot between now and the beginning of November. You could probably get away with selling an $82 covered call for $53. So if you're going to sell covered calls on Walmart, you could get away with selling an 82, which is a 27 delta. It is the perfect safe point because if Walmart goes up, you make $200 on the shares, another $53. It's $253 on every 100 shares. If we do this 5 times, well, then we're making over $1,250, almost $1,300 at this point, depending on, the premium that you get for the covered call. So you figure we could sell 5 of these. This is $265 plus the shares themselves. So this would be a good premium. 27 delta. If you must, you could sell a 19 delta, which is also pretty good. Another stock that I highly recommend looking into is Wayfair. Wayfair has had a really good buy the dip moment here with a little bit of a miss on the earnings, stabilized, and now it's run all the way up to $56. I called Wayfair back when it was 39. I called it again when it was 41. And then up here, when I got out of my previous trade, I called it again, and now it's at $56. If you had gotten in at 42 right now, you'd be making $1,400 on every 100 shares. Personally, by the new year, I anticipate that Wayfair will return to its highs up in the $70 range. So there's still about $15 to $20 to go on Wayfair by the new year or spring. Great stock to get into. I would sell aggressive cash secured puts in the $52 to even $54 range, preferably right around $54 to get in, but you could miss the entry, which is why you could just buy the shares and sell covered calls. Cash secured puts, you're going to have to really sell 54 to make juicy premium. You could get away with a 53 or a 52 if you really want to buy that dip, wait for a pullback Monday morning or a potential pullback, which could also happen Tuesday or Wednesday. So realistically, you could get maybe $50 for a 52 or a 53, depending on where the stock goes. But I would sell 30 deltas. And right now that's a 14. This is a 20. A 54 is a 26 and a 55 is a 33. So a 54 delta, really good. Puts you $3 out of the money and you still collect $70 roughly. If you're going to sell a covered call and you get in, let's say at $56 and the stock doesn't really pull back, you want to sell around a 25 to 30 delta. So specifically at this price, a 30 delta is going to be about $60, maybe $59. If you sell a 60, that gives you about $3 move. You can make $300 on the stock and then $63 in the covered call. If you have 500 shares, this is a really good way to make about $350. You could probably get 75 for this. Yeah, $350 in 1 week. Plus, if you have the 500 shares, you're also making $1,500 there. So this is almost a $2,000 week or two, depending on how long you sell covered calls. And granted, you really could not sell covered calls. You could just hold the stock. That's what I like to do. And I just take profit from the shares a lot of the time. But because it's unlikely that these stocks are going to run a lot due to volatility, I don't think Wayfair is going to break 60. And I definitely don't think it's going to break it in the next 2 weeks. It could, but I think that 60 to 62 is pretty safe, at least until after the election. Another good stock is SoFi. I talk about this stock a lot, so I really don't need to talk about it much more here. We already know this stock very well. I talk about it a lot. I would sell $7.50 puts if you just want premium. If you want the stock, which you should, I would sell $8 puts immediately. This stock's going to go above $8 this week. If it doesn't, you get assigned, you get the stock anyway. I really wouldn't bother selling covered calls on SoFi because of the fact the premium's not the greatest and the stock's going to run more than that anyway. This is something I would buy and hold, and I would hold it indefinitely well beyond the new year. Another good stock, Coca-Cola. This is a defensive stock. When the market is volatile and it's pulling back, when in doubt, they say zoom out. Well, when in doubt, buy Coca-Cola. Literally, Coca-Cola does not go down. Like, look at this. The market tanked quite a bit in August, and there's no pullback. This was back here. It ran. The only time that Coke had a little bit of a slight downtrend was summer of 22 until summer of 23. But it consolidated, and now Coke's on the rise again. So I would say Coke is very safe, good dividends. No need to talk about calls and puts. I would just buy the shares, but you could sell 70 puts going a month out. That's totally fine. I see Coke realistically hitting $75 by the new years. We go into Kraft and Heinz, another very good defensive stock, a cyclical stock that I would definitely think about. It has fallen from its highs in the 42 to 44 range down to 35. It was as low as 31 last October, and it got down in July to around 32. Even when the market pulled back in August, this stock went up, just like Coca-Cola. So this is another stock that I would really consider putting your money into, especially until the election time. Another good stock, Bank of America. It goes without saying, Warren Buffett loves Bank of America. I love Bank of America. Look at this stability. The market's pulled back quite a bit in August. It dipped, came right back up, consolidated right in the perfect range between 38 and 40. And it did peak at 44 and it's pulled back quite a bit. And this is because Warren Buffett sold off. It had a big reason to it. It had a lot to deal with Warren Buffett though, right here. Relatively speaking, it's consolidated, more covered call premium, and you guys will get more dividends, and the stock will appreciate over time as it's a strong stock. 3 more stocks that I want to talk about. Alibaba will be good. However, the outcome of the election might determine what's going to happen with Alibaba, although both parties have pretty much indicated that they're going to make things difficult on China. I do believe the stock will still do very well as they partnered with NVIDIA, so I think this stock is still a pretty decent buy no matter what, and as you guys can see, it's on the constant rise and it's gapped up quite a bit. So if I could recap which stocks are best between now and going into the election time, it would be Walmart, Wayfair, Coca-Cola, Kraft and Heinz, Bank of America, and Ally Financial, and maybe Affirm. Those are all good stocks, but my main picks, honestly, like I said, Walmart and Wayfair are the top 2. You really can be safe by buying these stocks, selling puts around 20 delta, and then if you get in, selling covered calls at 30 delta. This ensures a safe exit with a good juicy premium. On the exit side of things on the call, this is going to give you a little bit of extra room to get it cheaper. But if you just buy the stock, then you can get right into selling covered calls at a 30 delta. If you guys don't understand what the delta and the Greeks mean and the things that I explain in this video, and you don't understand why I'm recommending these stocks, I highly suggest thinking about taking my training course, Discord, and one-on-one coaching and signing up. My students are all up 10 to 15% every month, and I have a lot of students that have doubled their portfolios in the first 2 to 3 months. Like one of my students named Sherry, who went from 8,000 to 18,000. I have another student named Thomas who went from $8,000 in the whole 4,000 all the way to 17,000. And I have students that started with 300,000, they're up to 400, and the list goes on. If you guys want to take control of your financial freedom, I'd love to help you guys out. You can sign up at any time, investwithcorey.com right there on the screen. Link is in the information box below. I look forward to speaking with you soon and helping you on your journey. Thanks so much for being here, guys. We will catch you on the next one.